Hi, my name's Adam. Welcome to the channel. Thanks for joining us today. Today we're going to talk about CPP enhancement. What is it? How does it work? How does it affect you, whether you're close to retirement, in retirement, or far away from retirement? And those ones definitely it affects the most. So let's break down what this means and how it can affect your CPP benefit and payment going forward. Before we jump into the content, I just want to say, if you're getting close to retirement, haven't built up a financial retirement plan yet, have no idea when to take CPP, your OAS, how to draw down your RSP or RIF properly, all these things need to come together as one. And you need a clear income and tax plan to do that. And if you don't have one in place, you need to take the steps to get one in place. Talk to your financial planner. If you don't have one or don't have someone to work with, you can look on our website, parallelwealth.com/planning. We have a few different offerings on there. Book a call with me if you need to, or talk to your financial planner. But get a plan in place. You cannot enter retirement without a clear plan. So take that step and make sure you're on track when you hit retirement. So CPP enhancement, let's just quickly go over it here. So what is it? It's basically a ramp up of CPP. So this was launched or announced in 2016. In 2019, payments started to go up, and they're going to continue to go up until 2024. All that means is the amount that you pay in as an employee and the amount that the employer pays in has been increasing every year since 2019. If you're self-employed, you're going to really notice it because you're paying both sides of it, right? The employee and the employer, you're double paying that. Now, the idea behind it, CPP was originally set in place to replace 25% of your income. Going forward, the goal is to replace 33% of your income. So they're trying to build out a bigger CPP to better protect and better provide for retirees in Canada down the line. There's also a second part of CPP enhancement, and I'll go over this in more detail here in a second, but it's essentially, right now you pay into CPP up to a certain amount. So in 2022, it's $64,900. So you pay CPP up to that income level. If you make over that, there's no more payments. But part of the CPP enhancement is there's something called YAMPE, and I'll go over that in a second here. And what that is, it's an enhancer, an additional payment into there. And when we take the increased payments on the base amount, plus this additional payment, the goal is down the road to actually increase CPP by 50%. The maximum now is about $1,200. They're trying to get the maximum to about almost $1,800 in today's dollars. Now, that's a rollout over many, many years. Actually, the maximum, that 50% gain, is actually not till 2065, which a lot of you I know are watching this saying, yeah, I'll be long gone by then, Adam, and I understand that. But it does ramp up over time. You know, that additional piece is really for the younger generation, but it's good. Maybe you have kids, grandkids that fall into that basket, and you know that they're going to be better taken care of in retirement. A lot of younger generation people right now are having a tough time getting into the market, savings, getting a good job, all of that. So by paying a bit more into CPP, having their employer pay a bit more into CPP, hopefully it'll set them up a bit better when they do hit retirement down the road. Don't get me wrong, even if you're getting close to retirement, the CPP enhancement is for everyone. From 2024 onwards, the enhancement increases your benefit by about $14 a month. So it does increase, and again, that compounds over time to get to that 2065 number. So if we backtrack to 2019, you were paying into CPP and you were paying 4.95%. That was your payment. The employer was matching out on their side. So there's about 10%, 9.9% going into CPP back in 2019. We're currently at 5.7%. You're paying 5.7, your employer is paying 5.7. The idea is from 2019 to 2024, we're ramping up contributions on the base amount from 9.9% to 11.9%. And so we're paying more into it, but we're going to get more out of it. And I think when this announcement happened in 2016, I remember a lot of our clients saying, oh great, the government's just grabbing more money from us because they need to top up the CPP because it's falling short of funds. That's not the case at all. CPP has a lot of money. In fact, it's well funded for 71 years plus. It's separate from the government funds coffers. There's a CPP investment board. It's separately managed. It's very well managed actually. And a lot of you asked, you know, should I pay into CPP or not? And we're going to do a different video on that. But the CPP invests in alternative assets. They invest in real estate, stuff that you don't have in your typical RSP or TFSA portfolio. And when people ask me, should I invest in CPP? I say, well, I do personally. I could just pull dividends from my company, not pay into CPP. I choose to draw in a salary so I can pay into CPP and build up a bit of an RSP. That's my strategy. It works well for me. Again, everyone's different, but I do like the CPP as an investment, as an alternative asset to everything else that I have going on. So in 2022, if you make up to $64,900, that's kind of the max. That's called the YAMPE. And you pay up to earnings, up to the YAMPE, you pay into CPP. So $64,900, and you're going to pay 5.7% of your income into that. And again, your employer is going to match that. So that's the base amount. Again, it's 5.7 and it keeps ramping up. So that's kind of phase one or part one of the CPP enhancement. Now, the second part of this is YAMPE. And that stands for Yearly Additional Maximum Pensionable Earnings. Starting in 2024, there's going to be this YAMPE, and this is additional. In 2024, let's say the YMP, that base amount that you pay CPP on, is $69,700. So that's going to be the base YMPE. So you pay half of your 11.9% into CPP up to $69,700. Then on income between that number and $79,400 is this additional number. And that's the one that's going to get you up to that 50% versus the 33%. So it's a bit of a top up. And they're trying to say, look, if you make a bit more money, you can actually pay a bit more into CPP to garner a bit more earning down the road when you pull money out of your CPP. This is not a tax grab. You're paying more in, you're going to get more out. The government says, look, based on the fact that you make a bit more money, maybe you need a bit more money down the road in retirement. So we're going to allow you to pay a bit more in, and then thus down the road get a bit more out of your CPP. So on that second piece, the YAMPE, as an employee, you're going to pay 4% of your earnings into there, and the employer will pay 4%. So 8% total. So 11.9% on the base, 8% on the additional. And again, that's split 50-50 with your employer. If you're self-employed, you're going to be paying both of those pieces. So if you've been getting your pay stub and you feel like I'm paying more into CPP the last few years, it's true, you are. You've been paying more into it, and thus down the road when you take CPP, doesn't matter what your age is now, down the road when you take CPP, you're going to get more out of the CPP payment. So that's the goal of the CPP, is to provide more income in retirement. As a Canadian citizen, I say, well, the more money retirees can have down the road, the better off we are as society, right? We have more money, hopefully less people on welfare, less people on need. It's a better for the economy. So I think this ramp up of CPP is a great thing for everybody. And I know, again, if you're watching this and you're close to or into retirement, you say, Adam, this either doesn't affect me much or it doesn't affect me at all. That's absolutely true. Hopefully you've set yourself up, right? You built your plan based on paying less into, right? And the younger generation are paying more into CPP. Thus, the difference that you didn't have to pay into CPP, hopefully you were saving that up and doing it on your own. I like the idea of the government kind of forcing a bit more internal savings. A lot of you watching this say, you know, Adam, I saved up my own, RSP and TFSA and pension and all this. I don't think the government should be grabbing more. And look, everyone can have their view on this. Again, I'll go back and always say this is a good thing, because I see the other side of the coin where people haven't been able to save. They have 150,000 in RSP when they hit retirement, and otherwise they only have CPP and OAS. All of them, I guarantee you, all of them would say, yes, I wish I had been forced to pay a bit more into CPP, a nominal amount, to have a much bigger benefit down the road. That would have been really beneficial for me. So it's good that they're building this up over time. It will help the economy as a whole. And again, that smaller amount, maybe you haven't even noticed it. You've been paying more into CPP the last few years. Have you noticed those additional payments into CPP? Yes or no? Leave your comment below. Thanks so much for joining us in this video. We'll see you in the next one.